Hey guys, Mike back here with another stock strategy explained, and today we're going to be talking about the super hot fire AMC stock. In the last few weeks, unless you've been living under a rock, the AMC stock has been going absolutely crazy, going all the way from just $2 a share all the way up to almost $20 a share, now back to about $6 a share. And in this video, we'll be covering the question if you should invest in AMC long term and why. But before we begin, just a quick disclaimer, this is not legal, tax, financial, or investment advice. Make sure you do your own research before you do any sort of investing. And also, make sure you give this video a thumbs up, especially if you like seeing movies, because who doesn't like seeing movies? And make sure you subscribe to this channel for more information on stock updates and IPO analyses. And with that, let's get right into AMC. And so with the question, should you invest in AMC? We'll be taking a look at three big questions. Number one, what are their current operations look like? Number two, what do their long-term prospects look like? And number three, what does their long-term valuation look like? Diving into number one, with their current operations, it doesn't look so hot right now, especially because of the pandemic and everyone staying at home. During their latest earnings report, AMC noted that domestic attendance was off by a grueling 97% compared to the same period a year ago, and international attendance was down by 82%. So obviously, as you can see, due to the pandemic, a lot of people are not able to go out to the movies right now, which is really hurting AMC's bottom line. And crazily enough, in the third quarter, revenues went down to about 119 million, down from 1.3 billion on a year-over-year basis. So as you can see, there is a huge decrease, and the pandemic is really hurting AMC. And on top of that, their net loss, because of the pandemic and because of their operations, was over $900 million. That means they've lost $900 million in that third quarter alone, which is insane. But the one shiny piece of AMC is obviously they know about the pandemic, they know about all their costs, and right now they're actually taking a lot of swift actions to cut back on costs. Part of this has been reducing their capital expenditures, part of this has been reducing their operational expenditures, so they're trying to pay less and less to just keep minimum operating costs to a very low. And with AMC's current operations, right now, we can tell they're not a really great business. They're losing a lot of money because of the pandemic, which really has me wondering, why is their valuation so high compared to a year ago or even 2 years ago before the pandemic? And the only thing I can think of is people see long-term upside. They see AMC growing, they see them recovering not only to pre-pandemic levels, but growing even further. And we'll take a look at their long-term prospects and their long-term growth to see if this actually adds up. So the big question is, will people continue to keep on going to AMC in the future? Obviously right now, their big thing is selling movie tickets and selling food, but who knows, maybe they can turn into something different. As far as I can tell for movies right now, people are probably not going to go to AMC as much in the future because convenience is the biggest selling point right now. You can imagine everyone wants everything on demand. They want to see their movies on demand. They want to see their TV shows on demand, whether it's from their iPhone, whether it's on their PlayStation 5 or on their TV. People want convenience, especially during the pandemic. People want to see movies on demand. And on top of convenience, people don't want to leave their houses to go see a movie. You can imagine it takes me maybe 15 minutes to get in my car and drive to the movie theater. It's actually a lot of effort. I gotta put on nice looking clothes, I gotta make myself presentable, and on top of that, I have to pay money, about 10 to 15 bucks for a movie ticket, and I have to drive my car. That's a large amount of effort just to go see a movie that I can easily pull up on my TV while sitting in my sweatpants. And building on top of that on-demand part, it's pretty crazy, but movie theaters actually have a schedule. Meaning, I need to plan my whole day, and I need to plan when I'm going to go to the movie theater, say at 6:20 p.m., to go see a movie. Again, that's not the trend that people want. They want to see movies on demand on their schedule. They don't want to plan around a movie theater schedule, let alone plan around someone else's schedule. They want to see a movie when they want to see a movie. So in my opinion, movies and entertainment of the future is going to be at home or in the comfort of your own home. And it's going to be all about convenience and on demand. Right now, you can imagine AMC charges 10 to 15 bucks a movie ticket, which is a decent amount of money when you consider a TV is only, 500 bucks for a pretty nice 4K TV. And you can imagine the on-demand factor is so important. It's going to be so much easier to pull out your phone, watch a movie from your phone, or cast it to your big TV rather than getting into your car, looking presentable, driving 15 minutes one way to the movie theater just to spend 15 bucks. So in my opinion, long term, AMC is going to lose a core part of their customer base because people are going to be realizing they can watch the same movie for free or for a reduced price at home for a lot more convenience, based off of their own schedule rather than AMC or another movie theater's schedule. However, I do think movie theaters will always be a thing and will always play a part in our society. You can imagine going on dates. You can imagine it's a nice, safe space. It's a space in public. Instead of inviting a girl over to your, couch to watch a movie, maybe she doesn't feel as comfortable. Movies are always going to be a great date spot. And on top of that, you're always going to want to experience IMAX or the latest Christopher Nolan movie or a grand Hollywood masterpiece in a movie theater, maybe once or twice a year. There's going to be surround sound, there's going to be a super big screen, there's going to be comfy chairs, there's going to be nice popcorn. What's not to love there, right? You can imagine also birthday parties. It's a great place to get together with some friends, watch a comedy movie instead of having to sit in someone's small, cramped house. And this is my favorite part. Apparently for some movie theaters, you can rent out a whole theater for like 99 bucks and just play video games on the big screen with your friends, which is absolutely insane. And totally I would do that for 99 bucks. Like who wouldn't for like a fun party or get together? And on top of that, AMC has a lot of debt, which I see accruing in the future, both on interests and both needing to take on more debt right now just to get through the pandemic. So in my opinion, long term, AMC right now makes most of their money off of movie ticket sales and food sales. I think long term, people are going to want to watch movies at home instead of going to AMC, meaning AMC is going to lose a lot of their core customer base, meaning they're not going to be making as much money. So long term, I don't see their prospects being so hot. So last but not least, let's take a look at AMC's valuation to see if they're actually worth the price that you're paying for them. So right now, AMC's market cap is around $2 billion with a price per share of $6. So the crazy thing is, you might not have known this unless you're actually a savvy investor, but there are now 441 million shares outstanding, which is about 4x more shares since the end of the third quarter. In other words, if you're an AMC shareholder, you have been significantly diluted, which means that one share is worth less controlling stake of the company than it was a year ago or 2 years ago, which is a pretty big deal. And right now I see AMC is a high overhead business. Again, they lost $900 million, right, in just one quarter. They're a high overhead business with lots of debt, and I don't see it having a huge place in the future besides, the occasional going out to movies, going on a date, or renting out the movie theater for a birthday party. So in my opinion, they're worth something, just not $2 billion. Before the pandemic, they were worth around $730 million. I think they're probably a little less than that right now. I would give them a fair market valuation of about $500 million, so $500 million. And I think that's around a fair valuation that I'd say. So right now, I would personally not invest in AMC because I don't see much upside. I don't clearly see how they will win back their core customer base of movie theater goers unless they drastically pivot to some other form of entertainment. And so with that, we wrap up my analysis on AMC. Let me know down below in the comments, are you considering investing in AMC? And if you do own AMC, are you considering selling your shares now from this analysis? And with that, remember, make sure before you do any sort of investing, make sure you understand a company's product strategy, and most importantly, make sure you make money. Peace.